Shawn and Kyle. My name is Anita Loan, and I want to know how interest rates will affect my purchasing power.
Hey y'all, welcome back. My name's Shawn.
And I'm Kyle.
And we're here to unlock another mystery of real estate for y'all.
And remember, not only are we doing all these videos to provide a little entertainment and value for y'all.
Nope. We're also doing it to drum up some business for us because we're active agents in the Atlanta market and we want you to hire us. We also want you to trust us to find you an agent anywhere in these United States. And finally, we want you to
Please love us.
Please do. And if you do, hit love, subscribe, share, comment, tell your friends.
That's right.
That's right.
Hey y'all.
Hey.
Well, this week our question comes to us from Anita Loan, who wants to know how interest rates affect her purchasing power.
Thanks so much for your question, Anita. It's important because rates are in fact on the rise, and they not only have an impact on your buying power, but so many other factors in the real estate market.
You see, buying power is essentially calculated by your debt to income ratio, the amount of savings you have to put down on a house, along with the current interest rate. In a nutshell, a lower interest rate will give you more buying power, meaning you can afford to spend more. Let's dive in a little bit deeper.
Let's go all the way back to 1981, and between 81 and 2021, rates have pretty much been on the decline. For perspective, here's a chart to show how rates have changed over the last 5 decades. In 1981, the average 30-year mortgage rate was 16.63%.
That's crazy. It's like a credit card interest on your house.
Right, versus last year was what, right around,
I think 2.96%.
yeah, right around 3% or so. Due to stricter mortgage regulations after the housing recession, interest rates have remained historically low. But with the Federal Reserve trying to curb high inflation, rates are on the rise.
They are, and higher rates makes your buying power lower. I mean, this can have other effects on the real estate market as well, including a reduced demand and a reduction in asking prices. Because remember, a market value for a home is simply what a buyer is willing to or can afford to pay.
Yeah, and affordability is everything. 1 point increase in rate means your buying power is decreased by 10%. For example, at an interest rate of 4.75, you can qualify for a $300,000 home. Congratulations. However, if the rate goes up to 5.75, you now only qualify for a $268,000 home. So your buying power has been decreased by $32,000.
Bummer!
Yeah, and it's not the only hit you take with higher interest rates. It also means you'll spend more for your home in the long run because you're paying more interest.
Yes, and I even learned firsthand from experience when I refinanced my home and got a rate that was 1% lower that it reduced my payments by $400 a month. I mean, that's basically a car payment. Or maybe a pre-COVID car payment.
I was gonna say, not today. If you're searching for a home with this volatile market, it's important that when using mortgage calculators online, you remember they don't include taxes, insurance, or HOA, so be sure to talk to an experienced lender to find out your accurate buying power today.
Please do. And interest rates have actually gone up 2% in the last 3 months alone, and despite that, home prices are still expected to rise another 10.8% this year. Both are rising at the fastest pace ever in history.
Did you say her street?
I did. Watch a lot of
I love
roads.
that. I love that. The increase in rate is trying to balance the market by cooling it. The hope is that houses are taking longer to sell because of the double whammy, and that means higher prices and higher interest rates.
No whammies, no whammies, no whammies.
But the U.S. has a severe home shortage as we've underbuilt for a decade, so there are fewer homes for sale. Experts say that even with the rate hikes, there's still going to be a long way to go before the housing market returns to normal.
And unfortunately, this is more bad news for first-time home buyers, many of whom have had to become renters by necessity, or they're moving to cities where housing is more affordable.
As more buyers are priced out of the market due to their lack of buying power, the lack of demand will eventually affect sellers. Prices will stabilize or decrease. The hope is that we will transition to a more stable market for everyone.
And so, Anita, now that you know how interest rates can affect your buying power, be sure to tune in to us regularly as we continue to unlock your real estate questions.
And don't forget,
not only are we the high and low of real estate,
I'm always low.
I guess I'm a little high, but we also want to be your dream team.
That's right, your dream, this team. We specialize in single-family homes and TLC, that's Townhomes, Lofts, and Condos.
And as always, tender, loving care.
Aww. Hey y'all, thanks for watching our videos. If you want to buy or sell real estate in the in-town Atlanta market, we want to be your trusted advisors. And if you live anywhere else in the United States and want to be connected to a full-time licensed real estate professional in your area, we can help with that too, and at no cost to you. I'm a poet, didn't know it. Anyway, connect with us on our website at yourrealestatedetectives.com.
In fact, be sure to follow us on all social media platforms, Facebook, Instagram, at The Real Estate Detectives. And finally, we want you to like us.
Like us!
So if you found value in these videos, make sure to like, subscribe, share with a friend.
That's right!
Hey, y'all.
Hey!